Okay, children, now we can start with the final accounts with adjustments. Okay, so this is your first question, that is question number 6. I have decided to start from question number 6. You can start, I mean, you can practice question number 1, 2, 3, 4, 5. Okay, you have to practice from question number 1 to 23. In fact, final accounts, this is very, very important because if you solve these type of questions, sorry, up to question number 28, sorry, question number 26, yes. So from question number 1 to question number 26, you must solve each and every single question, because these type of questions will form the base for class 12. Okay, because we have to do so many things in class 12, that is making a balance sheet, then PL appropriation account, okay, partners capital account, and so many other things are there. Okay, we will see when we reach in class 12. Okay, so many accounts we have to prepare: revaluation account, realization account, okay, and balance sheet, that is vertical method as well as horizontal method. That is, in fact, the vertical method is of uh, only for the companies, as per the uh, latest amendment made in the year 2013 September 2. Yeah, it came into effect from September 2nd. Yes. Anyway, let us start from question number 6. Now you already know from the previous chapter where we did final accounts without adjustment. In fact, there was only one adjustment, that is closing stock. Okay, and I have already said that if the closing stock is given in the given inside the trial balance, it means that it has been already adjusted with the purchase. Okay, so the closing stock will not appear in trading account, but in balance sheet it will appear. Okay, but if the closing stock is given outside the trial balance, then closing stock will appear twice. That is, one, okay, for once in trading account, okay, and this and for second time it will appear in the balance sheet. In fact, whatever the items that are given outside the trial balance as adjustments, they appear two times. Okay, be it in trading account and balance sheet, okay, be it in PL account and balance sheet, or be in trading account and PL account. Okay, so sometimes it can happen, okay, that an item, it can appear in trading account and PL account, but not in balance sheet. Okay, trading account one time, PL account second time. For example, if the goods were distributed as free sample, okay, then that particular adjustment, it will appear in trading account and PL account. Okay, so please keep this in mind. This is very, very important chapter, final accounts. Let us start from question number 6. Okay, you know how to prepare the trading account, that your trading account, it starts with opening a stock. Okay, so first of all you will write the opening stock. Okay, then you will write the purchase, and from purchase you must adjust the returns. Okay, now there can be two types of returns: return inward and return outward. Return inward is actually your sales return, okay, and return outward is purchase returns. Okay, so sales returns is equals to return inward. Okay, purchase returns is equals to return outward. Okay, remember this. And in this trial balance, only returns is return. Okay, no purchase return, no return outward, inward, okay, purchase, sales, nothing is mentioned out here. Only returns is return, and the balances are given in both debit column and the credit column. So how to identify this? If the returns are given in the debit column, then it is the sales returns. Okay, and if the returns are given in the credit side, or the, you can say it is written in the credit column, then it is your purchase returns. Okay, because we already know that purchase is an expenditure, nominal account, so it will always have a debit balance. Okay, so if you want to deduct anything from this debit side, then it must be credited. Okay, and sales is your income, so it will always have a credit balance. So from the credit side, if you want to subtract anything, then you will debit it. Okay, because if you credit again, then credit plus credit, it will be, the increase in the number. Okay, it will be added. So if you want to subtract from the sales, then you must have a debit balance for the returns. Okay, so this is how you will identify whether it is a sales return or a purchase return, that is return inward or outward. Okay, and yeah, here only carriage is mentioned. Okay, only carriage is mentioned. So carriage, basically, it is your carriage inward. Now carriage can be of two types. One is inward and the other one is outward. Carriage inward will be recorded in the trading account, but carriage outward will be recorded in the PL account. Why? Because carriage inward is related to purchase, whereas carriage outward is related to sales. I have already explained this in the previous video also. Now, if only carriage is mentioned or freight is mentioned, okay, then you must assume that this carriage is inward. Okay, if only carriage is mentioned, okay, then you must assume that it is a carriage inward. So you must record in the trading account, debit side. Water and gas. Now this water and gas is your direct expenditure. Okay, here it can be your fuel and power also. That is also your direct expenditure. So you will write water and gas. Okay, so you will write these items first, and from sales you will make the adjustment for the returns. And since this closing stock is given outside the trial balance as an adjustment, so you will record the closing stock out here. Okay, then you will find the total. Okay, so the total will be 91,000, and from 91,000, if you subtract these items, you will get the balance of 48,550. This 48,550 is appearing towards the debit side. So we already know that if there is any kind of balance towards the debit side, it is your gross profit. Okay, now this completes your trading account. Okay, now let us move on to PL account. And PL account is actually the continuation of gross profit. I mean the trading account, sorry. So you will start from the gross profit. Okay, so the gross profit is appearing towards this debit side of um, trading account. So this gross profit will come out in the credit side of PL account. Okay, sometimes the people, they write out here as this CD, and here they write, sorry, they write BD also. Okay, it is your choice if you want to write CD, BD, whatever. Okay, but it doesn't make any kind of sense, so I'm not writing CD, BD and all. Okay, so by gross profit, if the loss was there, then the loss would appear towards the debit side. Okay, and you have to include this rent, electricity, postage, printing charges, okay, legal charges. All these are your indirect expenses. Okay, and interest earned is your indirect income. So we already know that in trading account we record the direct expenses and direct income, whereas in PL account we record direct expenses and the direct income. Okay, you already know this part. Okay, you already know this particular section, right? Now I have to discuss about this adjustment first. Now closing stock we have already included in the trading account, right? Now outstanding wages. Now what you have to do is that outstanding, okay, if there is any kind of outstanding word or accrued, you will add. Okay, but if there's any kind of a prepaid or advance, you will subtract. Very simple. In case of expenses, but in case of income, it will be just the opposite. If the income is accrued, then you will add, and if the sorry, I'm talking about the balance sheet. Sorry. In both expenses and income, outstanding should be added, and advance payment or prepaid must be subtracted. Okay, that part we will discuss in the balance sheet. Okay. So here you can see in the adjustment number B, outstanding expenses, wages. So wages were outstanding. Okay, for the particular year. For the particular year, the wages were outstanding. That is for the year ended 31st December 2018. That is, for this particular financial period or the accounting period, there was an outstanding wage of rupees 700. So the wages are already given in the trial balance, rupees 2,500. Yeah. After water and gas, It's written wages and salaries. So wages and salaries is 2,500, right? But there is an outstanding amount. So 2,500 plus 700, it will be 3,200. Okay. Similarly, electricity is also outstanding. The electricity amount is 2100, and you must add the outstanding amount, then it will be 2,400. Okay. But as I already said, that if there is any kind of prepaid or advance payment, then you will subtract 700 minus 200, then it will be 500. Okay. So why are we doing so? Because we prepare PL account and trading account according to the accrual basis method. Okay, so as I have already said that you must go through accrual basis and the cash basis theory section. If you have gone through, then you will understand that part. Okay, and here you have this point number D, interest earned but not received. So that is your accrued income. Okay, so this is your accrued interest. So 390 plus 100, it will be 490. Okay, then you will find the total of this credit side, it will be 49040, and from 4940, if you subtract these items, then you will get a figure of 41,360. So this balance is appearing towards the debit side, then it is called net profit. Okay, now let us move on to balance sheet. Now in balance sheet, uh, we have to include all the items. Okay, we already know that part. The assets towards the asset column, liabilities towards the liabilities column. Okay, liability side, that is your buildings, machinery, furniture, closing stock, cash in hand. Okay, so these items will appear in the asset column. Okay, but I have included these parts also: accrued interest and prepaid printing charges. Let me just highlight it with yellow color. Okay, excuse me for that part. Now, after preparing trading account and PL account and balance sheet, you will have a look at the adjustment for the last time. Okay, whatever the adjustments are given, it must appear 2 times, and of course the adjustments will appear in balance sheet at the end. Okay, closing stock. So closing stock must be included, you know that from the previous chapter. Okay, and outstanding expenses. Now outstanding expenses are actually a liability. Okay, you are supposed to make the payment, but you haven't made any kind of payment yet, but you are supposed to make the payment. So whenever there is kind of, whenever there is outstanding expenditure, then those outstanding expenditure will appear as liabilities towards the liability side. Okay, because these are your uh, current liabilities. Okay, uh, by liability we also mean the responsibility, remember that part. Okay, so if there's any kind of outstanding expenses, it will appear in the liability side. And this prepaid printing charges, so if any expenditure is paid in advance, that is known as your DRE, deferred revenue expenditure. Okay, so this deferred revenue expenditure, it acts as an asset. Okay, so for a short period of time, so it must be included in the asset column. Okay, that is your this prepaid printing charges I have written out here. Prepaid deferred revenue expenditure. Interest earned but not received. You are supposed to receive the interest of 100, but you have not received 100 rupees yet. So that is your accrued interest or your outstanding interest, 100, and you must record in the asset column. Okay, so these were the things that I wanted to discuss in this particular question number 6. It's a very simple question. Okay, as we move forward, questions will be more trickier and more harder. Okay, and I request you to solve these questions while watching the video. And remember, until and unless you match the balance sheet, you must refer the question again and again. Okay, so you have to look at the question till the end of the solution. Okay, when you start the solution from trading account, look at the question. Then you prepare PL account, again look at the question. While preparing balance sheet also, you have to look at the question. And when your balance sheet it matches perfectly, when both liabilities and the assets they are equal to each other, then it means that your the entire work is correct. Okay, your trading account, your PL account, and balance sheet is correct, but there can be some mathematical errors. Okay, so sometimes your trading account and PL account may not match, but your balance sheet it may match. So that is the error in calculation. Okay, so I will tell you what to do when this kind of errors they arise while doing the solution of these kind of questions, that is final accounts with typical adjustments or simply adjustments. Okay, so I request you to start from question number 1, and you can see that problems involving no adjustment for GST, as I already said in the beginning only, that we will not touch GST part. Okay, so from question number 27, there will be the adjustment for GST also, so we will exclude that section. Okay, so we will solve only question number 1 to question number 26. Okay, and remember, I'm telling you for the last time that whatever the items are given outside the trial balance as adjustments, it will appear 2 times. Okay, remember that.